What is up, everybody? Welcome back to another episode of Benzinga Live. I'm your host, producer AB, and today we've got a packed show. Going to be talking about a lot of different things, and we've got a guest coming up at noon Eastern, the Traveling Trader. Excited about that. You've probably seen some of his YouTube videos. Pretty big channel, so I'm excited about that interview coming up in about 15 minutes. But before we get to that, we've got a few things to talk about. We're going to talk about Tesla's Investor Day. We are going to talk about Target's earnings. We are going to talk about these crazy weather patterns happening in California and why it matters to stocks, or I should say what stocks that can impact, and we'll look at those. I have been looking at some more. We had it on the ETF summit a week or so ago. We had Procuron, who talked about their fixed ETF, which is all focused on companies that help in the wake of natural disasters and whatnot. So we're going to talk about which companies, which stocks benefit from these crazy weather patterns that we're seeing. And if that trend continues, that we're seeing more and more of these, we're going to look at, which stocks we like for that for the long run. Again, we've got some earnings data to run through. But before we get to it, let's go ahead and roll that intro and we come back. We'll hop right into it. And as always, if you guys have any stocks, any trades, anything you want to check out in the chat, just let me know. And I'll pull up my trusty, dusty Benzinga Pro, and we'll take a look.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, let's start with the title of the show, which is Tesla's Investor Day. We're going to take a look at what's going on with the stock in our Benzinga Pro. So as you can see here, we're just on the overview right now. I'll bust over to the chart real quick just so we can see some intraday action of how Tesla is trading. Looks like, we hit a top here earlier in the day. Actually pre-market around 212, now down at 205. Let's go to our news feed here. Just gonna let this load for a second here. Let me catch up on the chat real quick. Oh, is it a hot mic? Let me see. Testing. 1 2 1 2. 1 2 1 2. I just turned it down a little bit. Hopefully that helps. Automatically adjust mic volume. There we go. All right, this should help. Let me know. Sorry about that. Y'all. Oh, maybe that's why my thing's not loading. I'm not logged in. That would help, right? All right, well, let's just go to our article then. All right, Tesla Investor Day preview, $25,000 vehicle, Cybertruck update, and vision for the next decade, and more analyst predictions. This week, Tesla is hosting its Investor Day in early February. CEO Elon Musk tweeted, hints at what we can expect. Master Plan 3 to a fully sustainable energy future for Earth will be presented on March 1st. The future is bright. So tomorrow, the call will start at 4 p.m. Eastern, so after the market closed. All right, let's see what some analysts have to say about this. So this is Morgan Stanley's Adam Jonas says, we look for Tesla to unveil a suite of technologies required for the mass adoption of EVs at far lower price points, a critical component of Master Plan 3, Jonas said. The analyst currently has an outperform rating and a $220 price target on Tesla, so that's about $15 higher than where we're at right now, or a little bit less than, probably around 8% from where we're at right now. Tesla's price cuts were unprecedented in the automotive sector and show the company's strength in supply chain and vertical integration, he explained. All right, I disagreed there. I mean, I wouldn't say price cuts typically show strength in anything other than just you have more inventory than demand, which if you're a company selling goods, you don't want to have more inventory than demand. So I don't know how this guy's spinning the price cuts as a positive, but hey, it's very possible that Tesla's March 1st Investor Day may have a greater significance on the market's perception and ultimately valuation for Tesla's EV competitors than for Tesla itself, Jonas said. Tesla needs to continue to make their manufacturing more efficient to maintain its operational lead in the electric vehicle space, Jonas advises. As the competition in EVs intensifies and we see the first signs of a deflationary EV environment, doubling down with a revamped Model 3 can bring new enthusiasm and cost savings, he said. So here are my thoughts, and I've made this point about Tesla before. Tesla, one of Tesla's best things that it has going for the company is that it does have way higher margins than most automakers. What that means is that Tesla makes more per car. So say it costs Tesla, I'm just making up numbers. Say it costs Tesla $10,000 to make a Model 3 and they sell it for 30. Boom, they're making 20 racks, 20 grand off that one car compared to maybe a Ford who might only make like 5 grand off a car. I don't know what the actual margins are. All I know is that Tesla's margins are very, very good because the automotive space typically doesn't have that great of margins. But part of what goes into that is that Tesla and Elon Musk have figured out a way to streamline the production process and basically have like, this one mold. So instead of, a million different parts and pieces you're putting together, the body of the Tesla is basically all like, just a few pieces or like one big mold. Now, there's a big benefit to that. We just talked about it. The margins are higher. It makes production easier. It allows the company to streamline production. The drawback is that now if Tesla wants to update the body of its cars, it takes it'll take a lot more money essentially to create a whole new mold for these cars. So that's why like the Tesla Model 3 or some of these models haven't changed the body in like 4 or 5 years, because once they do that, boom, there goes the margins. Now you have all these fixed costs going into it into building a new model. So I think from a consumer standpoint, with cars, people really do want to see like new models, at least like different variations year to year, whatever. So I do see it as somewhat of a weakness for Tesla if they're unable to put out different models, updating their models, because in doing so, again, it'll cut into the margins. So let's continue. So we hit Morgan Stanley and Adam Jonas. Now let's go to Wedbush and Dan Ives. Says the Investor Day could lay out the plan and vision for Austin, for the Austin, Texas-based company in the next decade. With demand that is 2 times production coming out of the gates for 2023 and a 1.8 million bogey in deliveries this year. This will be a key update to gauge the current macro demand environment post-Model Y3 cuts. I've said with Musk's Master Plan 3, we expect a slew of updates on the product roadmap, which we believe will include Cybertruck updates and timing, semi-truck delivery updates, 4680 battery technology, and scale update and the roadmap to what will ultimately be a vehicle in the $25,000 to $30,000 range. Ives, who has an outperform rating and a price target of $225 on Tesla shares, said tax credits on EVs and increased competition, plus lower price points from Tesla vehicles, are a major focus from investors and analysts. So here's my take. Whoa, did not mean to do that. I would not be chasing Tesla up here, and here's why, for a few different reasons. So I think the Investor Day will most likely be fine. I think, a lot of these announcements are expected to make, Elon Musk will make, but more times than not, when you have these planned events that everyone's know is coming up, you think about like the days that Apple is releasing new iPhones or whatever, like a lot of times the stocks don't actually rise that much because the expectation is already for there to be a lot of buzz and excitement around it. So unless Tesla and Elon Musk say something tomorrow that really goes beyond already that baked in excitement and positivity heading into the day, there's a chance the stock not only doesn't go up, but could even go down, where people, it's like the buy the rumors, sell the news. We're going to get the news tomorrow. And I anticipate that there'll be people that are selling that news. And that's just for tomorrow. I mean, and looking at Tesla overall, I mean, Tesla's stock has now gone up essentially more than 100% in the past month and a half, 2 months. I'm sorry. Anytime you got a stock that goes up that quickly, that fast, or that much, that quickly, like you're due for a drawback. You're due for some people taking some profits. And we haven't really seen that with Tesla. I think as the stock has come back up, the short interest has started to increase again in Tesla. And when that happens, I think it actually makes it like harder for Tesla to fall a lot because the more people are short, the more they have to cover when the stock doesn't go down. So it creates this whole thing. But at the end of the day, like interest rates aren't going anywhere. We're not cutting interest rates anytime in the next few months. Tesla's environment right now, like I still think if you're going online and you're looking at cars.com or Carvana or whatever, like Teslas are still listed for a lot cheaper than they were 6 months, a year ago. And I don't think that bodes well for the company. And, Elon can talk about the production and all this all he wants, but it's almost a bad thing if they keep producing more cars and they're not selling, right? If all that's happening is Tesla's like bolstering up its inventory and the cars aren't flying off the lot, then that's going to be a problem for Tesla. And I don't know exactly what I mean, who knows? A month from now, we could be looking at a different environment and people are buying Teslas left and right. I have no clue. I'm just saying from a purely like valuation standpoint, I would not be chasing Tesla up here. Other things I wanted to get to today before our first guest of the day, Target. Target stock is trading up more than 2.5% after the company reported earnings before the open today. So Target beat both on EPS and revenue estimates, and the EPS came in really strong. We can check that out here. So Target non-GAAP EPS of 189 beats by 49 cents. Revenue 31.4 billion, beats by about 670 million. So these are all good numbers, and you might be like asking yourself, why isn't Target up even more? The CEO did give some kind of muted guidance, some kind of like outlook saying, okay, might not be. Target exec says inventory may shrink, may continue to rise before we see rates begin to moderate over time. Target Corp exec says the company plans to launch more items starting at $3, $5, $10, and $15 this year to appeal to value-conscious shoppers. So while the company beat and the earnings were good, the stock's not up that much because the CEO and some other executives basically were like, yeah, I mean, we did well, but things aren't, as great as they have been at the past, maybe in certain times. So here's the question I'm going to ask the chat. I'm going to throw this out here to you guys. Would you rather own Target right now or Walmart stock? And you got to tell me why you picked one over the other. What about Gordon Johnson? I don't know, Jay Rice, but I can imagine he's bearish Tesla going into the thing. I want to make it clear, I'm not really bearish Tesla going into tomorrow because, like, I don't know. Tesla's stock, it's been doing well. I mean, when a stock's in an uptrend, it's in an uptrend. I just wouldn't be chasing it up here. I wouldn't want to go long it. I wouldn't really want to go short it. I guess if I had to buy calls or puts, I'd probably buy puts just because, again, literally for no other reason than the fact that it's already up more than 100% the past 6 weeks. Which to me is just always a recipe for, okay, someone's going to come in here and take some profits. Walmart because I shop at Walmart plus Sam's Club under Walmart. Yeah, that's okay. That's an interesting point, First Flick. So I don't hear this take a lot really. So Target doesn't have essentially the bargain big deal or sorry, bulk option. Like Walmart has Sam's Club, and then of course you have Costco. Target doesn't really have that. And I know during the pandemic, Costco and Sam's Club did really well. I wonder though, in like a inflationary or a recession environment, like how well does Sam's Club and Costco do? Because I don't know. And by the way, I love Sam's Club, Costco. I actually don't have a Sam's Club membership right now. I used to for like years and years and years in college and stuff. The best place if you need to go get toilet paper, paper towels, all that stuff. You got to go to Sam's Club, Costco. But for food and stuff, like if you're used to buying like huge bulk things, all this stuff, and all of a sudden you need to start cutting back a little bit, I wouldn't be surprised if some people start going to Walmart for groceries instead of Sam's Club because they're trying to save a little bit money. Maybe they don't need to buy 24 things of Gatorade. So I don't know. You can see your doctor in Walmart now. Yeah. Okay. So that's also one thing I will say about Walmart, and I see our first guest hanging out backstage. We're gonna get to him in 1 minute, but Walmart, I will say, I think a lot of people see it as like this boring stock, boring company. It's Walmart. You know what you're getting. I do think Walmart is making some very cool, kind of innovative things to where they're like, all right, we're gonna try to like be a 21st century Walmart. For example, it's app, and you can now get like groceries delivered through Walmart, and Walmart's like really trying to take on Amazon in this regard and say like, okay, hey, why would you pay X amount on Amazon for Whole Foods? We'll deliver your groceries for you. And then like Buglog's saying, you can see your doctor in Walmart now. I mean, they have the eye doctors in a lot of them. So I think Walmart is making some good leadership decisions in terms of how to stay on top as we head into a more and more digital world. So that would just be something I look out for like the growth story of Walmart and seeing what it's doing with its app, what it's doing with its grocery deliveries, what it's doing with all the different things that Walmart is trying to offer. Because again, if you're just looking at Walmart as this like boring old stock and you're not looking at like some of the cool things you're doing, I think you're missing part of the storyline here. With that said, I don't really have any take on like if I like or hate the stock up here. It looks like we've been in this kind of consolidation period for really since December 2020, right? We've been kind of in this range from about 160, we'll call it, down to 120, and just been bouncing around there. Currently at 142. So I would not mind adding some Walmart to like a long-term position, whatever. I'm not saying I would go out here and buy it right now for a swing trade or anything, but because I like at least the direction that Walmart's heading in some of the ways, and it's got that just brand recognition, I would not mind adding some to long-term portfolio. Super Walmart will service your car, oil, and tires. Yeah, I mean, you go to Sam's Club, you can get gas. I mean, you could buy a car from Sam's Club if you wanted to, for Pete's sake. So, I mean, Walmart, again, I don't know. I sound like just like the biggest Walmart fan ever right now. I wouldn't even say that's true. I think I just was surprised when I myself learned about a lot of the kind of like tech forward things that Walmart's working on and trying to do. And it's been cool. So, all right, I see our first guest hanging out backstage, the Traveling Trader. You guys have probably seen some of his YouTube videos. I'll drop that channel in the chat as well as his website. But without further ado, let's go ahead and give the Traveling Trader our very special Zinger Nation welcome, especially for his first appearance ever on Benzinga Live. So without further ado, producers, let's go ahead, roll that intro, and when we come back, we'll be talking to the Traveling Trader. Mr. Traveling Trader, how you doing today?
What's going on? How are you doing? Good to be
I'm
here.
good.
Can you hear me?
Yeah, I hear you perfectly fine. You got a good microphone, good setup. How's everything going on your end?
Yeah, it's going well, during market hours, but but yeah, it's going well. Are you on the East Coast?
Yeah, so I'm in. Our headquarters is actually in Detroit, Michigan, which is on the East Coast time zone. So I'm not on the East Coast, but I'm on like New York time. Well, how about you? You're
Okay.
the traveling trader. You tell me where you're at.
I am, but headquartered in California, so I get up bright and early every morning for this.
There you go. So one thing, and I want to just give, I want you to be able to just give an introduction and stuff. But one thing maybe we can get into, and depending on what part of California are you in?
LA, Southern California.
Okay.
Yeah.
So have you seen any of the kind of crazy weather that I've been seeing on the news and stuff?
Yeah, I was joking about this though because crazy is relative, right? To you guys, it might be laughable. To us, anytime we see rain, it's you know there are driving warnings and road condition warnings and whatnot. But it's relative, right? So crazy for
Well,
us, not crazy for you.
I did see a stat on Twitter, and again, this is just a stat I saw on Twitter, so I don't want anyone coming at me saying this is fake news or not, because I'm being upfront about where I got this news from. I don't even know where who the account was, but they said that in certain parts of Southern California this winter has gotten more snow than like New York City, which I found really hard to believe, but I guess maybe there just hasn't been a lot of snow in New York City this year.
I haven't seen it, honestly. I mean, I do go snowboarding, but you got to drive a couple hours away to get there. But
Where
in
do you
terms
go to,
of
like
right outside my window,
Mammoth, Tahoe? Where do you go?
Mammoth, Tahoe, but there's spots right outside of LA. There's Mountain High, there's Big Bear. Those are like an hour and a half to 2 hours
Oh,
away
Big
from
Bear.
me.
Yeah, you could do the thing where you like ski earlier in the day and then go to the beach in the afternoon.
Done it before. Yeah.
Wow, unreal. All right, enough about the weather. Why don't you give us a quick introduction to who you are, kind of like what your channel is, how'd you get into investing? I know a lot of our audience is already familiar with you, but maybe a few aren't. So, give us just a quick rundown.
Yeah, started the channel at the end of 2017, really beginning of 2018, and it was just born out of passion, honestly. Like I didn't expect it to go anywhere. I didn't even think there were that many people interested in trading, especially derivatives such as futures and options. I thought that was just a black hole for most people, and then obviously 2020 hit, and everyone's on their phone, and now everyone's a trader, right? And so not only are there now millions of new traders, but it also seemed like there were millions of new channels talking about trading. So really the channel kind of blew up, I think, in 2020. Before then, we were pretty modest. I think we were at around like 40,000 subs. It took like 2 years to get there too. And then in 2020, it just kind of grew. But in terms of my foray into investing, I actually majored in finance in college. Worked at a small brokerage firm, decided I wanted to be a big shot Wall Street corporate lawyer, went to law school, ran out of money, dropped out, and then started coding. And really when I used to be in the workforce, most of my experience is actually in software. But I always traded, for me personally. And then, like I said, in 2017, started the channel, and now it seems like everybody's really interested in trading, which is cool because I remember a time when days like CPI or FOMC, those were just in the background, like nobody really paid attention to them, and now everyone's really focused on things as granular as like the FOMC meeting minutes, and you see it blasted all over Twitter and dissected and whatnot. So it is a different time, but also really cool to see that many people interested in it.
Yeah, and I mean, I think that I guess timing wise, it worked out well for you, right? You were doing the channel for a little while, like you said, was kind of modest, and then blew up during the pandemic. So now that you're at this stage, more than 250,000 subscribers, you're basically able to run this channel. I know you have a website too, but like as your full income, everything.
Yeah, I mean, trading, and then obviously any of the monetization benefits that you get with running a channel, right? So we also run a trading group, an education company, where we teach people how to trade things like derivatives that are, usually complex if one is trying to learn on their own. But yeah, it is full time between trading, between the channel, creating content, which is a full-time job in and of itself, right? So.
Yeah. So, you mentioned that you're trading, derivatives like futures and options. So I take it your style is more kind of these quicker trades. Are you not then talking about any like long-term investments?
Yeah, I mean, certainly we do focus on long-term investing. It's funny because the channel is really split up between people who are interested in trading and then people who are interested in the macro view. So, um, I don't know about in terms of like the running the most efficient YouTube operation. If you talk to more experienced YouTubers, they tell you you should probably branch out into newer channels if you are splitting topics like that. So maybe having one channel that's related to just trading and one that's related to macro. But as of now, I talk about both. I would say equally. In terms of me personally, I think it's a two-pronged approach, right? Like I do have a large portfolio that I've been accumulating for almost 2 decades. So obviously, I have interest in investing as well. But on the day to day, I'm trading. I'm not really checking my
Yeah,
long-term portfolio day to day.
and I think like content wise, right? Like we can sit here and talk about long term investments and stuff, but like how much content can you really make out of that? Whereas trading, you can be doing like every day, different trades, this and that. Like how many times can you say like, yeah, I'm gonna buy Apple? Like that doesn't make that great of a video. Well, I guess if you want to make like a whole thing of why you're buying, whatever. But you know what I'm saying is that trading, I think, is a little bit more exciting than the long term investing. So it makes for a little bit better, YouTube content and videos in general.
I agree. Yeah, I definitely agree. Although, technical investing is also something that I see growing as well. So, and I saw you pull up Walmart's chart right before I jumped on. So, looking
Yeah,
at 50% retracements in addition to all of the fundamentals that you might take into
right.
account, right?
And I think with the fundamentals right now is after the past year or so where the equity markets have obviously taken a big downturn, I think you have a lot of people who they're realizing, okay, it's not as easy as just buying GameStop or AMC and watching it go up all the time. I got to like do some due diligence and find stocks that have inherent value and try to find these like good names. So I think I have seen a little bit more of an increase in interest among retail investors for trying to go through some of these fundamentals. And then, like you said, and that's how I like to do it too. I like to look at the fundamentals and I like to look at the chart too. You have a lot of people that are like, oh, I don't even care about what a company does. I'm just going to trade the chart. And then you have some people who say, like even Warren Buffett says, I don't look at the charts at all. I just look at the numbers of the company. And I'm more in the middle. I like to look at both because if they're both out there, why not look at both?
Yeah, I agree. And Warren Buffett probably doesn't need to look at a chart because when you can make $1 billion in dividend income from one company, why would you look at a chart?
Yeah, I wouldn't look at that chart. So I want to get a little bit specifically into because it's just something like options. There's a million different ways you can trade options, right? You can buy just straight up calls and puts. You can be doing spreads. What are like your favorite ways to implement options in your trading? And then how do you get people started? Like if someone's brand new to trade, I'm sure that you know this, but like I'm sure like half the people that are brand new to trading, all they want to know is how can I do options? Because that's what they see on screenshots of people's accounts blowing up like 1,000%. It's from options, so they want to do that. How do you get people started? And then what is your go-to kind of option strategies?
Yeah, I mean, I think my option strategies really vary depending on the time frame. So, like in 2020, 2021, naked options were pretty easy to trade. I mean, there were people that were creating articles saying, I gave my monkey $50,000 to pick options for me or to pick stocks for me, because stocks were just going in one way. So, buying call options and sitting on them for a month or two was lucrative at that point. This is a much, much harder environment. So it really depends on, I would say, what somebody's trying to achieve. If someone has, for instance, a large stock portfolio, they're probably better off, selling calls or buying protective puts in order to hedge their portfolio. If you are an active trader, it is a very tough time to swing trade right now. I've been trading in this environment, futures more so than options. But on for instance, on Nvidia, if you're expecting a big move on earnings, buying something such as a strangle where you don't have to pick a direction, but you are still banking on Nvidia making a big move one way or the other, could still be lucrative, but it is I would say a lot more challenging in this environment. And then I know options traders in our group that just sell iron condors every single day on SPX, right? So they pick a far out of the money call range, or far out of the money put range, and say the S&P is going to stay within this range. And although it's a small amount of premium that they're getting, if you're doing it every day, it adds up. So, and in terms of getting people started, I mean, it really depends. What I've realized over the years, everyone's competence level is so it's on a wide spectrum, right? There are people that get options, they understand all the nuances, they understand what happens at assignment, et cetera, within a month. And then there are people that can, spend a year trying to learn, and they still are scared of things like, what happens if I get assigned? What do I need to do? Am I going to lose my house? Am I going to lose my car? So it's a broad spectrum, right? And it's really what we try to do is get people onboarded as quickly as possible. But I tell people, if you don't understand something and you don't understand the consequences, paper trade. Paper trading is free. That's something that I wish I had when I started, right? But yeah, hopefully that answers your question.
Yeah, no, it does. And I agree with the paper trading, because I do think that's a great way for people to just get the hang of options, especially like realizing how quick, they can move in price if you're just buying out of the money calls or puts. But I will say, to the paper trading thing, the one thing that I've found with it is like, there's a big difference between losing money on a paper account and then losing money on a real account. And I've found that a lot of people, for whatever reason, I'm one of these people, needed to learn the hard way, right? And losing my real money trading options, not just a paper account, to be like, okay, yeah, this isn't just like a, little fun game to like, it's like, oh, you got to know what you're doing if you want to, do this. So, but it's investing's all about, where you're willing to take on risk and what you're trying to get out of it. So for me, the way I see it is, and I say this on the show all the time, because I'll talk about my trades. Like, I have my investment account, my like long-term investment account. And then I have my like Robinhood account that I just like to have fun with. And I'll buy options in there, and I'll like, so if I have $300 that I want to buy some SPY calls with, and I know damn well that there's a good chance that $300 turns to zero, but I'm willing to take that risk. Okay, I'll go do that. But I'm not going to trade options in my like retirement account, because there's no reason for me to do. I'm just going to sit on my stocks, let them, grow, collect those dividends, reinvest the dividends, keep adding to the retirement account. And then I keep my Robinhood account completely separate. I basically see my Robinhood account like my DraftKings account almost, like I'm basically just putting on bets out there. And I try to be open about that, because I would never teach or tell anyone to do what I do with options, just because, again, it's not very, I get lucky sometimes. I'll buy some like out of the money SPY calls, and they'll go up 300% overnight, and then great. But more times than not, that doesn't happen, and I lose some money on there. So I think having that kind of being able to differentiate between like a long-term investing account and then like an options account where you're just trying to have some fun, I think that can be helpful for a lot of newer investors.
I agree. As a matter of fact, that's something that I talk about a lot, that trading and investing are two different sports, and you definitely should have, there's no reason why you shouldn't have two different portfolios, right? Like even on something like TD Ameritrade, they'll let you open up 1 million accounts if you wanted to under the one umbrella account. So, having both, I think is vital for sure. With regards to paper trading, I agree with you that having skin in the game creates a much different environment. But I more so focus on paper trading to know what the consequences of something is, right? Because a lot of people, when they trade options, they don't understand what's a limited loss strategy versus something that might, have an unlimited loss strategy, which usually you get into when you start selling things as opposed to buying them. But the one thing that I try to make sure that people understand, because this seems to be lost on beginners, is that options by nature are time decaying instruments. They're meant to go to zero, by expiration if they're out of the money. And that's something that people don't get. They think they can just buy an option, hold it until expiration, and see what happens. But it's very much like sports betting, right? Where a bet before the game starts is worth a lot more than a bet with 2 minutes left in the fourth quarter, where most of it has already played out. So, I think that one tenet really gets lost on people, that these options are meant to lose value over time, and if they're not moving in the direction that you're expecting them to, they will eventually drop to zero if they're out of the money.
Yeah, and that's one of those things where, you learn that pretty quickly intuitively when you have money and options because, say I have out of the money SPY calls and SPY's up, but like only, 0.2%, or it's not up enough, like my options will be down. I'm like, what the hell? SPY's going up, but my options are down. And you just got to realize that kind of the hard way, that like, unless you get that like big move and it's quick, it all depends on like, your options and your expiration date. Because if you have leaps, then it might not matter tomorrow what, the SPY, whatever. But if you have like short dated options and you don't get that quick move and the stock's just moving sideways, your option contracts aren't going to be moving sideways. They're going to be moving down. So
Exactly.
That's something that, people will learn. So I want to, do you have any, like, you saw me looking at Walmart. Do you have any individual names you're watching right now? I know you mentioned Nvidia earlier, which is one of my favorite stocks to watch just because it's always moving a lot, and I also have it in my long-term account just because I like the future potential of the company.
Yeah. In terms of individual names that I'm looking to invest in, at the moment, no.
Or just that you've been trading, not necessarily to invest.
Oh, trading. Yeah. I mean, here's in terms of trading, I tell people that you're much better off sticking to the same names every day, because then you get a sense for how the price moves, right? So on a daily basis, I'm trading the S&P 500, the NASDAQ, and then I'm trading names like Tesla, which are mega cap names, but do act in a more volatile manner. And then obviously the chip stocks, like you mentioned, in Nvidia. But, one could easily do a Google search for what are the most liquid options and, stick to those names at the top. That list doesn't really change on a daily basis. Once in a blue moon, you will get like, oh, Bed Bath & Beyond is seeing unusual activity this week. And you might want to trade that just based on the fact that there's a lot of activity there. But you really don't need to flip around names. So one of the, the most common questions I get is, how do I know which options to trade? You don't have to shy away from the indexes. Like if you just traded the S&P 500 and the NASDAQ every day, you can make your bread and butter doing that. So yeah, and then on the futures front, obviously the same. Like I trade mostly ES futures and Q futures, and then I will now, because of all of the activity with interest rates, I'll trade, ZT futures or ZN futures, which are the 10-year and the 2-year futures as well. So
yeah, I've heard about a lot more people doing that the past, year or so with the interest rates, is trading the futures for like the 10-year and stuff. And I mean, I think a lot of people that are doing it probably would have never guessed that's what they'd be trading right now. But what about, so for some of the biggest, mega caps with volatility, right? Tesla, Nvidia, Netflix. I've found that a lot of times those option contracts tend to be like pretty expensive compared to other names. Like, how do you deal with that, or do you, is it worth it for you because you're like, okay, it makes sense that these are more expensive because they're more volatile, which makes like the price action more likely that it's gonna go either up this much or down this much?
Mm-hmm. Yeah, I mean, one way that you can mitigate the expensive nature of some of the volatile options is to do vertical spreads, right? So instead of saying, oh, Nvidia ran up, I don't know, 100 something percent since October. It had a monster reaction on earnings. Where's it going to go from here? Is there more incremental upside versus a more probable downside risk? If you think so, then instead of buying puts, which, like you said, can be expensive, you could buy a put spread, in which case you are limiting the price that you pay for that spread, and you're also limiting the amount that you would gain, because it's not unlimited gain in the same way that it would with in the same way that it would be with naked options. But you could still make the same directional bet if you create a vertical spread as opposed to just buying naked options. So that's what I would tell people to start. If they are interested in betting directionally, instead of buying expensive calls and puts, you can buy put spreads and call spreads.
Yeah, and I've implemented that strategy a lot, especially on stocks like Tesla before Tesla split, when it was like a, $800 stock or whatever. Like it just, the options themselves were so expensive, but if you do a little credit or debit spread, becomes a lot more affordable and really a great way to trade some of those names. What about right now, just in terms of like overall market outlook? Are you, would you consider yourself?
Yeah. Yeah, I'm laughing because I recently did a video where I said that I did a video back in October where I said that I was buying stocks, and I'll give you my reasoning for that. And then a video about a couple of weeks ago where I said I was selling a lot of the stocks that I bought in October. And it's so crazy to see, I guess the dichotomy. Like, you can't make everybody online happy, right? So when I said I was buying stocks in October, I got all these messages saying, "Oh, that's so irresponsible. How could you tell people to buy?" Obviously, I'm not telling anybody to do anything. But you get all these doom and gloom people that are saying this is going to be the worst recession ever. How could you buy stocks here? And then same thing when I sold a couple weeks ago. How could you sell here? Don't you know that we're in a bull market? So the dichotomy of market opinions is really funny. In terms of where I think we're going to go, this is one of the funniest and weirdest times, I would say, in the market, right? Because we have so many conflicting signals. Inflation is at 40-year highs, but unemployment is at 50-year lows. We have the largest dislocation in bond yields, the fastest pace of rate hikes, right? But then you also have data that says we've never, ever beat inflation without hitting a recession. But also, when recession has peaked, that has tended to coincide with market bottoms. So it's like, where do you go from here, right?
Yeah.
Yeah.
I mean, I think, and go back to October when you were buying stocks and you said you had all these doom and gloom people being like, oh my God. I think that was, when you go back and here, I'll just pull up the SPY chart here and like on the daily, and we can go back to October. So, I mean, October is when we hit this low of like, we'll call it 350 on the SPY, a little bit below 350, 345. At that time, like you said, inflation running out of control. We knew the Fed's going to have to keep raising interest rates. And basically everyone was damn certain that meant we were going to like enter a recession by now, right? And then what have we seen since then? Like you said, unemployment has actually gone lower, which a lot of economists have been like flabbergasted by, been like, oh my God, how is unemployment going down while we're raising interest rates? This makes no sense. Mm-hmm. But also, and I was hearing that a lot too. And even from Jerome Powell was said basically, we need to see pain in the labor market to have inflation come down. He was basically saying we need to see unemployment rise. We need to see some, kind of a recession to see inflation come down. I always kind of fought back against that on this show, just because I think to say it's not possible to have inflation come down without engineering a recession, like that wasn't a really good argument to me, because if you look at the sample size for that, they're going off of what, like 3, 4, 5 times in the history of the United States that we've like dealt with an inflationary environment like this. Mm-hmm. And it's a way different one, compared to other times. And I think right now, if you told a lot of people, or if you could go back in October and tell a lot of people, hey, inflation's gonna fall. I don't know how much it's fallen out at this point. What was the highest reading was like over 9% year over year, right?
I think 9.1, which
9.1, and now we're at like 6.4. Yeah, so that's a decent drop. Of course, 6.4 is still way elevated and way higher than where we want it to be, but that's it's going in the right direction. If you would have told people in October inflation's going to move in the right direction, unemployment's also going to drop, earnings are going to actually look okay. So far, 68% of the S&P 500 companies that have reported have beaten expectations on EPS. I think a lot of people would say, hey, that sounds pretty bullish. So I think it makes sense that the market's a little bit higher right now than it was in October. The question is, can the economy essentially keep ticking, or will it eventually hit this wall because of the interest rates? But for right now, like the way I see it is like I don't see like when I go out or like at the weekend traveling, whatever, like people are still out spending, but it does not feel like there's some huge recession going on right now in terms of like just from an anecdotal, like what I see when I'm out on the streets or going out. And so I don't know, like I like you said, it's a very interesting, weird time because you have all these different conflicting data points being flown around, and we're basically just left here, like, pick a side. What do you want to do? I don't know.
Yeah, and I mean, to your point, the NBER, which is the group that's designated with declaring recessions, they won't do so until an average of a year later. So we won't even know that it could very well be the case, especially if it's very shallow, that we won't even know that we're in one until it's already done. If you go back to the SPY chart real quick, sorry, I did want to point something out.
Yeah, of course.
The reason that I bought in October, it's not because of some Nostradamus-like prediction, but it merely was at a near 50% retracement of the previous bull run. So from March until January 2022, we were almost at 50% of that bull run. And I'm like, okay, historically, this is a great time to buy stocks. Obviously, looking at individual names too, right? Like Tesla, I think hit a low of 101 at some point. But to me, I was okay buying the indices and the mega caps at that point. I didn't think that was the bottom. I didn't actually know. But I'm like, 50% retracement from the previous bull market historically is one of the best buy points in a bear market. So I'm going to start buying here. And that's merely why I started buying in October. Look, so far that is the bottom. Is it going to be the ultimate bottom? Who knows? I think it depends. I do think there's one scenario in which the market can drop lower than October, and that's if inflation starts creeping back up, because that is the fear that a lot of economists who have had experience with inflationary environments, like you said, they are seldom, but the times that we have had them, there are a couple of those times where inflation came back roaring. And that is what economists and the Fed are afraid of. And if that happens, then I do think we can break those October lows. But it very well could be that October is the low.
Yeah, and we've started to see that the past month or so where, inflation didn't keep falling month over month like it had. I just have a hard time for seeing inflation like run away, like get back up to 9% with the higher interest rates, right? Like obviously where the interest rates are at right now aren't high enough to be a huge hindrance on the economy, where unemployment's rising and inflation's just nosediving. But it seems like the Fed's kind of trying to find that equilibrium point to say, like, okay, we can keep raising rates. All right, we'll keep raising until, okay, now we can't anymore. Now unemployment's starting to uptick. Until that happens, they really have no reason to not keep raising rates a little bit, right? As long as unemployment remains low and inflation remains above the 2% target, the Fed has no reason not to do little quarterly or quarter basis point hike. So, I think it'll be very, that will be like the big question. And if we do see inflation start to uptick again, instead of just like staying level, then we might start seeing another 50 basis point or 75 again. But right now, like I think generally I would say I'm if a Super Bowl is a 10, like the most bullish you could be is a 10 and the most bearish you could be is a 0. I'm probably like a 6 or a 7. Like I'm neutral, but I'm more on the bullish side, just because I still think, and I don't know, you might see this too, I still see a lot of this doom and gloom out there. Like all these people that like seem so convinced that there's this huge recession coming, almost that they're rooting for it. And I just don't like it. I'm like, why are you guys rooting?
You know why? Why do you think that is? Like, why would someone be rooting for it? It's because they were doom and gloom at a time like October, or even before that at a time like June, and they didn't buy. And so now they were hoping that it goes back down so they get a chance. I mean, you look a little younger than me, but I always say that the people that pray for the dip the most are the ones that will never buy the dip. When I put out a tweet saying, when Tesla was at 101, I'm like, if you're not going to buy Tesla at 75% down, just posing the question, what are your requirements for buying Tesla? Right. And of course, I get all these responses like, are you stupid? Don't you know that Tesla's going lower? But I'm like, give me a reasoning why, if you wanted to own the company 75% down, what would make you buy it? And what are the reasons you're not buying it? And no one can give you a good answer. So to me, those are the people that are praying, like really praying for doom and gloom, because they missed the opportunity to buy. Honestly, the only flip side flip side argument, and it's not really a flip side argument, it's the extent to which one is bullish, right? So when the S&P got up to like 4,800 or whatever, you have to remember that, like, we had names like Lucid at 65, Coinbase was like 400, ARK was trading at 160, AMC was in the 40s.
Look at Generac stock. Generac got up to 520 down to one. The only reason I was looking at this one, it just reminded me when you were talking about all those like crazy runners, Zoom, you name it, all these crazy stocks.
Yeah,
I was looking at Generac because I was like, these weather patterns are getting a little crazy, like if everyone's getting knocked out of power, like, whatever. And I looked at the stock and I looked at the chart and I was like, you know what? I don't know if I really want that right now, but it is. I mean, we're back at where we were pre-COVID. So I don't know. I mean, I might take a look at some of the fundamentals on Generac later, but that was one that reminded me what you were saying. I mean, look at this. It got up to 525 in November.
That's nuts. And that's what I'm saying, is that to get for the S&P, even though a lot of these stocks aren't in the S&P, but for the market to get to that level, are all these meme stocks going to come back to the days of yore? I don't think so, right? So not with 5% interest rates. Not with 5% interest rates. So I think there's going to be a lot more demand on the mega caps or the leaders in these indices in order to get back to all-time highs again. So I think one can be bullish and say, hey, we've probably seen the bottom. But I think that, like you said, in a plus 5% interest rate environment, I think it's going to take a lot of growth for the market to get back to all-time highs. It doesn't mean we're going to crash, but it doesn't mean that the path is easy either. Right. 480 is a ways away for the SPY right now. I agree. I mean, that's another 20% from where we're at now. And I think, in terms of retail investors, you've had a lot of retail investors who have gotten burned on a lot of those high growth names, that I think you're starting to see the way a lot of the retail investors are investing like change a little bit, where a lot of them are now just buying ETFs and buying SPY and saying like, all right, I don't need to try to, do some of these like individual stock picking. But it reminded me when you were talking about Tesla and saying, okay, if you're not going to buy it down at 101, and this is funny how, like price oftentimes will determine sentiment, to where, when a stock's going up and up and up, everyone loves it. When it's going down and down and down, everyone hates it. So I remember, I'm pulling up Disney just for this example. So Disney's stock crashed like everything else did when COVID hit, right? It makes sense that the stock crashed. Parks are closed, whatever. Stock went down to $80 from 140, right? It was 140 March or end of February, down to $80 by the end of March. I remember here, like once Disney had come back up, looking back like, man, I was so stupid. Why didn't I buy Disney at $80? Like, I know Disney's not going anywhere. I know Disney's going to be around. Why didn't I buy Disney at $80? Flash forward like a year and a half, the stock starts slipping again, gets back down there, and I'm like, I don't want to touch it down here. This thing's so ugly. It's been in a downtrend for, whatever. And then it bounces again. And I'm like, oh my God, why didn't I do it again? So it's exactly what you're saying, where it's like when the stock's in a downtrend and it gets down to that spot, it's ugly. You don't want it. No one wants it. It's the unwanted child. And then when it bounces back, you're like, oh yeah, I mean, that probably would have been a good investment in hindsight. Yeah, it's really fighting human nature, right? Because at the end of the day, we have ape brains, and we don't want to be holding something that's losing value. And when other apes come across, say, like a fruit tree, everyone wants to jump on it, right? So when everyone's making money, everybody wants to jump on it. But holding something that's losing value is very hard because our nature is hardwired to go against that.
Yeah, and like you said, it's human nature. One of the I like, it's kind of like a joke, but it's someone told me it one time, and it really resonated with me. Where they were like, if you would have invested $1,000 in Apple in 1988 or whatever,
Yeah.
you would have sold it 3 years later for a loss of 80% when it dipped. You know, like if you had looked at Apple's chart, like, and you invested too early, you were down 80%, and like more likely than not, you probably would have sold. You probably would have said, okay, I don't want to lose all my money, and then you would have got out of it, and the next thing you know, 20 years later, you would have been a millionaire. So it's like, you know, a lot of times, like you said, it's understanding our own emotions and how we can kind of like, you know, take those out of the trading and investing. Because at the end of the day, like I haven't found that, you know, trading off my emotions is helpful at all or has ever helped me. So I don't. It's tough, but I think that's why this is it's not easy. I think that's why, you know, most people that try to day trade don't succeed.
Yeah, I mean, but there's also, you know, I always say that stat is a little padded, right? Because
Okay.
Day trading is one of the hardest things on planet Earth, right? One of the hardest professions on Earth, and I'm saying if you want to make a living from it, right, requires just as much dedication and practice as anything. Playing ball, golfing, playing chess, whatever, being a doctor.
All things of those I like, by the way, except for being a doctor. Well, I don't know. I've never tried that.
Well, there's actually a doctor in our trading group who and he's a surgeon. He swears that trading is harder than surgery. But my point is this. Trading is the only profession that you can literally wake up and try, right? Like if I'm at a Laker game and I'm sitting courtside, I can't just say, guys, give me the ball, I want to try to play. Or I can't walk into a hospital and be like, I want to try surgery today, right? But anybody can open up a brokerage account and say, I want to try trading today. And so the number of people that fail at it are you know, really skewed by the ease of being onboarded.
Got it. So there might be a lot of people in those numbers who try it for like a couple days without any education. They don't really know what they're doing, and they lose some money, and then they're done with it.
Yeah, you can't just walk into a courtroom and be like, I want to try to be a lawyer today and defend somebody, right? So it's like, it's one of the only professions where you can you know, get onboarded that easily because the barrier to entry is so low and fail. So that's part of the reason why it has such a high failure rate. Albeit it is still one of the hardest things to do professionally, for sure.
100%. Well, is there anything that we haven't gotten to yet that you would like to? This has gone a little bit longer than was originally scheduled. It's been a really good conversation, so I'm happy it has been. But I don't want to take any more time of your time because I know the market's open and you're probably trying to trade right now and whatnot. Yeah. All right, I'll let you go. I'll let you go make some money. But this was a lot of fun, and we got to do it again sometime. All right,
dude. Let's do it. It was great. Thank you for having me.
Of course, I'm dropping your YouTube channel in the chat. Go ahead and subscribe to the Traveling Trader if you have not already.
And all the links should be in the description of the YouTube, any YouTube video. So
there you go. You want to join the trading group, website, whatever? Just hit the YouTube channel, subscribe, and yeah, man, we'll get you on again soon because it's been a great conversation.
Thank you, man. Thank you for having me.
Of course.
Bye.
All right, y'all. Smash the like for Traveling Trader. All righty, y'all. We are going to wrap a few minutes early today. We've got about 15 minutes till 1 p.m. So without further ado, we'll be back. If not tomorrow, Thursday for sure. But tomorrow is Tesla's Investor Day, so watch out for that. I believe it doesn't start till we said it after the close. So I don't know. Tomorrow, Tesla's price action might be a little wonky heading into it. Some extra interest, maybe some extra volume. We shall see. I agree. That was good. We got to get Traveling Trader back on again. Good talk, y'all. Michelle, thank you. Thank you, Michelle. Let's see. Do I have any other final... The one thing I guess we didn't get to that I wanted to a little bit, which we can get to on Thursday, I mentioned it with Traveling Trader, is just I have been looking at some of these companies that I think could benefit from, like, you know, weird weather patterns, natural disasters. Generac's in there, but I don't know. I haven't looked at Generac's stock like that. I mean, the chart looks ugly. We just looked at it. Well, actually, it doesn't look like ugly if you zoom in from here. It actually looks pretty damn good. But if you zoom out, it looks pretty freaking ugly. So I don't know. I'll do some research on Generac. I'll let you know what I think on Thursday. Your guys' homework. I want some of y'all to come to me with some stocks that you think fall in this category of stocks that benefit from, climate change and natural disasters and crazy weather patterns. And again, I'm not investing in these stocks rooting for these things. I'm investing in these stocks because these are the companies that are going to help people out of these situations, right? Generac, I'm not buying Generac hoping, some big storm comes and wipes all these people out of power. I just know that when and if that happens, Generac's going to be the ones that are there that are helping. It's like Mr. Rogers said, anytime there's something like bad happening, look for the people that are helping. So I think some of these companies that are doing some of these things, of course, you had the tragic earthquake, and all these things going on. So I do think some of these things might get a little bit of extra attention here in the next few years. So we shall see. But alrighty, y'all. Home Depot. Yeah, that's a good one. A lot of the insurance companies too. People buy the insurance companies before there's supposed to be like a big hurricane or something. But alrighty, y'all. Thanks for hanging out with us today. Please smash the like if you have not already. Give me a follow on Twitter. It's on the screen right there. Whoa, now you can't see it. At AaronBree5. And with that, we'll be back. Money Mitch will be live swing trading at 3 p.m. He's going to be with my man Christian from Hertz. You got to stick around from that. From Hertz, Tribeca Trade. He always knows what he's doing. So peace and love, y'all. We'll be back soon.